Income Tax 2020. Tax software example. Adjustments to income, student loan interest. Come in, relax with Income Tax 2020. Here we are in our Lacerte tax software. You don't need Lacerte tax software in order to follow along, although I do think they offer a free 30-day trial, so if you can get access to it, it might be a good tool to be practicing with. But we're going to be focusing here on the Form 1040 and the Schedule 1, which will be related to it. We're going to be jumping back and forth from the data input to the tax forms and running different scenarios, the tax software helping us, facilitating the ability to do that. So we're going to be starting off with our single filer, Eric Smith here. We're going to be scrolling down. Our starting point is at that 100,000 for the wages. Then we have the standard deduction at the 12,004, the taxable income then at the 87,600. We can then mirror that in our tax formula in Excel here. We got the 100,000, 12,400 for the single filer. There's the 87,600 in the formula format. And then if we go back on over, what we're going to be concentrating in on is going to be the items that are the adjustments to income, and those are going to be coming from mainly the Schedule 1. Also note that they have this charitable contributions, so we'll talk a little bit more about that in the future, so that's kind of a new item. Typically the charitable contributions will be on the Schedule A, but then they have some that will be here, which can be a nice thing here. But in any case, we're going to go back to the Schedule 1. We're concentrating on the student loan interest. So we have up top, the Schedule 1 has two parts to it. The top part, Part 1, being the additional income. We're down here in the adjustments to income. Basically, these are the above the line type deductions, the deductions for AGI or adjustments to income. We're first looking down here at the student loan interest. So we're jumping down to line 20. If you take a look at our form, typically, we will have a 1098E, so most of the time when doing tax preparation, you might see the form 1098E, which would be an indication that, of course, interest was paid on a qualified student loan. The 1098E would be coming from the institution that was receiving, they're the ones that are going to be issuing it, the person that's going to be receiving the payments from the people that are making the payments, and they're required to then report if over a certain dollar amount, which I believe is 600, a 1098 E. So once you have this, then typically you're going to be recording it here on the student loan interest. I'm going to go ahead and jump to the data input. So I'm going to say jump to, and then let's imagine that it was at 3,000. So let's say the box 1 on this form said 3,000 here. So I'm just going to do the data input. I'm going to go back on over and take a look at what we have. And we see that nothing appears here. And we're going to go, why did nothing appear here? And typically your first thought is going to be, well, is there an income phase out that happened? They're making pretty good money for a single filer. Possibly there's an income phase out that happened, right? And if we go down to the phase outs here, we'd say for a single filer, yep, if they're over 70,000, then it's going to start to phase out. If they're over 85,000, it's gone. So let's bring it down. Let's say, well, what if they made 40,000 and take a look at those phase outs? If I bring it on over and I say, well, okay, what if I changed their income to 40,000? That's under the threshold. Then I go back on over, and now they're getting the 2,500. It looks like. So in other words, if I go then, I'm gonna check this off back to Schedule 1. Now we got the 2,500. Now remember, this thing is limited to 2,500, so you're not going to get any deduction over that no matter what the income level is. So there is no phase out happening here due to the income level. Even though we put in 3,000, it's capped at the 2,500. And then if I go then to the Form 1040, there it is, there's 2,500. We're bringing the 40,000 down by the 2,500 to the 37.5. That now is the adjusted gross income that we have. Then we're going to say the taxable income is, and then we have the standard deduction, 12,400, taxable income 25.1. If I enter that into my Excel worksheet, I'm looking for these adjustments then, adjustments to income, above the line type of deductions. So I would typically put them on a separate schedule in the same way if I was going to kind of double check this. Adjustments to income, student loan interest, we had 3,000, but it's capped at the 2,500. So 2,500 is going to be there. We're going to bring it back over. Notice that inputting it from the 1098 into the tax formula helps you to see what that cap is. And then you can say, okay, there it got capped. There's the 97.5. There's the 12,004, and that should bring us to the 85,100, then being on, actually, now I have the taxable income at 100,000. We brought it down to 40. Let's bring the income down to 40,000. Back on over to the tax formula. So 40,000, bringing it to the 37.5 standard deduction. That brings us to the 25,100, and there's the 25,100. So it can kind of work as a double check there. Now let's change this. Let's bring this down. Let's go back here and let's bring it down. So that's what the cap is. The cap's always at that 2,500. Let's say it's just 1,000 now. So we don't have to deal with the cap of the 2,500. Then I go back on over, and now we have the 1,000 there. If I go to the 1040, there's the 1,000. Let's go into the phase out range now. So if they're single and they're somewhere between 70 and 85,000, it'll start to phase out but will not go away entirely. So I'm going to say, all right, let's go to like 75,000 of income. Check that out. So I'll say, let's bring this up to 75,000 of income. And I'm going to say forms. And now you can see it starts to phase out there, right? Now we're at the 667. On there, if I go to Schedule 1, there's the 667. If you want to see the calculation of the phase out, we can go to the worksheet here, and it can go through that calculation. I won't go into it in detail here. Oftentimes, if a client asks you about this, you kind of want to know the general rules, which is basically that you have a $2,500 cap. As your income goes up, it will phase out. The income thresholds will be different based on your filing status, single, married, filing, joint, head of household, and so on. And then once they're within the phase out, that's usually enough to answer the question. You can kind of rely on the software to help you to calculate. And as long as you can see, well, it's in the threshold of the phase out, it makes sense that the computer is now calculating the phase out because it's within that range. I would rely to some degree on the software at that point in time, and usually when you're talking to a client, they don't need, to know the exact calculation down to the number of the calculation. So that's how I would generally do this. Although again, it might be useful to look through this phase out and see how the phase out is calculated, get used to the format of these calculations. But now it's being phased out there. Now, if I was to change the status, let's bring it up to married now with the same income. Then it should pop back up to 1,000. Because the phase outs will then differ if married. Because if you're married, you shouldn't have the same phase out. You should have a larger adjusted gross income before you start losing deductions and credits, you would think. So let's do that. We'll go back on over to the detail. Client info. We'll say they're not single anymore. Eric got married. So he's married, filing, joint. And then we're going to go back on over and say, what does that do to our forms? So I'll scroll back down. So now we have the full 1,000. The full 1,000 is there. If I go to Schedule 1, we see the full 1,000 is back. The full 1,000 is back. And that, of course, if I look at my table here, that's because for the married, you can have up to 140,000 before it phases out at all. And then if you go over 170,000, it goes away. So now, like if it'll start to go away if I go above 140. So let's say I say like 150,000. They're married now. And they got like 150,000, let's say 150,000 income. And then we're going to go back on over. What does that do? Brings it back down to that 667. So it's starting to phase out now. If I go back to the 1040, there's the 667 on the above the line there. Then it's going to phase out completely if I go over 170. So let's say 170,000. 170,000. And if I go back on over, does that remove it entirely at the 170? It does. Now it's gone, and the Schedule 1 has disappeared. So those are the general concepts. It should be fairly straightforward most of the time. Obviously, if you have the 1098, then usually it would be something that has the potential of being deductible, and then you're going to be limited typically with regards to data input by the cap, 2,500, and by the phase-outs that will vary whether or not they're going to be a single filer, married filing joint. Remember, the phase out is basically based on the adjusted gross income, this number, which is usually close to the income, but it takes out the upper numbers up top, and it's also called modified because it might be modified by things such as the interest deduction, because obviously the interest deduction would, you could see a loop. This would be a circle reference type of loop if you're talking about Excel, if you're trying to see, a limit of the adjustment, and the thing that you're trying to include is in the formula that you're trying to think the limit for. But basically, the phase out is on the adjusted gross income or modified adjusted gross income. And again, you can look at the actual calculation for it within when you see that phase out in the computer system to see exactly how it's going to be calculated if you so choose. But the general rule is you need to be able to recognize what's going to happen when you enter the data into the system, and you'll be able to help to do that as you enter the same data over here, which will help you to see where the caps are and see where the phase out is, just to keep you aware of them, and then be able to describe that or explain them to the taxpayer in a way that's not too descriptive and in a way that they can understand. Basically, you have an income phase out. If you want more detail, it's on the adjusted gross income. If you want more detail, it's on the modified adjusted gross income, really, and then you can actually show them the calculation if they want. But they typically don't want that much detail. Okay.